So let's get started with my presentation, which is about silver and how it is an inflation hero and an industrial superstar. I'm going to cover 5 main topics: silver as inflation hedge, silver as an industrial metal, how it's the most undervalued metal, its performance in previous bull markets, and how to invest in silver for explosive gains. Well, we're certainly facing big inflation. I don't think anyone has not noticed, and that's all across all economic sectors. Canadian inflation is running at about 4.7% over the last 12 months. It's in fact the highest inflation rate in 18 years. Food's running near 4% annually, shelter at nearly 5% annually, and gasoline at an incredible 33% over the last year. That's no different in the US. In fact, the numbers are somewhat higher. Over the last 12 months, US inflation is running at 7%, its highest in nearly 40 years. Food's running at over 6%, energy at over 33%. And so this is certainly something that, as I say, that no one is escaping. Everyone is dealing with, and it's certainly creating havoc for running businesses and the economy in general. It's also hurting bonds. Bonds are facing negative real yields. If you look at the 10-year US Treasury, its rate is 1.7%. If you deduct 7% inflation, which is the current rate, you're actually losing 5.3% on your money every year on the US 10-year Treasury. In fact, true US inflation is probably running somewhere closer to 14%. Some research groups, such as Shadow Stats, actually calculates inflation based on the 1980 method. And on that basis, we've averaged about 9% over the last 20 years, and we're currently running somewhere close to 14 or even 15% annually. And that is probably a lot closer to what people are experiencing in their everyday lives in terms of gasoline, rent, groceries, etc. So the Fed has recently announced or indicated in its minutes that it would likely raise rates up to 3 times this year, perhaps starting in March. However, the Fed is likely to remain well behind the inflation curve for multiple reasons. One of the main ones being that there's just so much debt. There's so much debt on the government side, on the corporate side, as well as on the personal side. So they know that they can only go so far in terms of raising rates, that they would crush the economy. And if you look at what just a 5.4% rate of inflation will do to your money right now, well, $100 today in about 10 years is only going to be worth about $59. So you'll only have about $59 of purchasing power from your $100 in 10 years from now. And that's it. As I say, 5.4%. If you run it at 7%, it's obviously considerably higher. And for all we know, we could certainly be looking at considerably higher rates of inflation, needless to say, going forward. So it is a bit scary times as far as that's concerned. Looking at producer prices, for example, in the 1970s, they were up 250% over that decade. This index started at 36 in the early 70s and ran to 93 for a 250% rise. These are all the inputs that producers need to buy, raw materials, etc., energy, to make the things that retail investors or retail consumers buy. And if we look at the producer price index, more recently, we've seen it soaring since April 2020. It actually risen from about 186 to 244 currently. That's a 31% rise in just 19 months. The Fed is hawkish, or wants us to believe that it's hawkish for now. And history shows us that silver and gold actually take off when rates start rising. Now, a lot of people are concerned that in a rising rate environment, silver and gold and commodities may not perform well because they compete with higher rates. But that correlation is actually quite low. And if we look, this chart is an example of what happened in the 1970s. And so the blue line is actually the yield on US 10-year treasuries. And the red line is the gold price. So during the 1970s, we can clearly see that gold rose very nicely along with rising rates. So that was certainly not a deterrent. That was the last major bull market that we saw for precious metals. Give you an idea, the 1-year treasury in 1971 was paying 3.5%. By 1980, it was paying 16%. That certainly did not discourage gold prices from rising. And so if the Fed starts raising rates, which it will likely do within a couple of months and continue to do, we shall see over perhaps a couple of years, very measured, very steady, very minor increases. I think that they will back off quickly when they see that the market tells them that they don't like it. And if we see the Fed backing off in response, I expect that precious metals will likely explode higher as a response to that. If we look at what happened with silver, for example, in the 1970s, well, it dramatically outperformed stocks. In fact, the S&P and the Dow were essentially flat for that entire decade, and that's without considering even the effects of inflation. And for sure, stocks in that decade were hurt by rising rates because the rate of interest is the rate of borrowing for companies, and that increases their operating costs. And so they certainly struggled that whole decade. Gold was up 18 times in the 1970s. Silver easily outperformed gold, up nearly twice as much, or a little slightly more than twice as much. Silver was up 37 times in the 1970s. We touched on this slightly before, but what helps determine what happens with the price of silver is the real rate. And real rates are the rate of interest minus inflation. So it's very simple. If you look right now at, for example, the US 10-year benchmark, it's running at, as I said earlier, 1.7%. Inflation is running at 7%. If you subtract 7 from 1.7, we're in a negative real rate environment. People are losing 5.3%, as I say, on a 10-year treasury, and those are the lowest rates in about 50 years on a 10-year treasury, as this chart shows us. Now, while this chart might look a little bit complicated, it's actually not. It's very straightforward. It's the real rate over multiple years versus the price of silver over multiple years. So the blue line is the real rate. We saw that it started to fall from late 2018 until early 2019, and then moved sideways, and then started to drop off further, crossed below zero. So real rates went negative in early 2020 and have remained well below zero ever since then. And about the same time when real rates started to fall, silver prices started to climb. They again moved sideways as real rates moved sideways from about mid-2019 till early 2020. And then they exploded higher. Silver prices exploded higher as real rates crossed below zero, and silver prices have moved sideways at an elevated level around the $22 to $29 range as real rates have remained low. I believe that we are in a rising inflation environment, and that should be very bullish for silver prices as we go forward. So let's talk a little bit about silver's industrial side and why it's so important and demand-wise from industry. If we look at the 2020 demand levels for silver, and this chart excludes demand from ETFs, industrial demand actually at 54% represented more than half of all silver requirements in that year. A large part of that was solar and electric vehicles and the automotive sector in general. 22% of demand actually was not from industrial, but physical demand. And we've seen that investment demand for silver has been exploding. We'll look at that a little bit more. If we go back to industrial for a moment, solar panels are the single largest demand application for silver. They represent 10 and likely this year 11% of demand. That's increasing with the green revolution, our green energy revolution. Automobiles, we see right now are at about 60 million ounces annually. So that's about 6% of silver demand every year. That should climb by about 50% to 90 million ounces within the next 5 years. Electric vehicles, by the way, which are increasing in terms of market share, use twice as much silver as as internal combustion engines use. So we certainly see growth from there. Electronics, printed and flexible electronics represent 48 million ounces or nearly 5% of demand, and that should also grow by about 50%, and that over the next 10 years. Medicine is very important. Silver kills bacteria. It helps to limit infections. It's embedded in medical equipment. We have silver nanoparticles that show up in cornea replacements and contact lenses. So silver is very important for industry, and its importance is growing. Here's a chart that shows a forecast for silver demand from solar panels. As I say, the demand is about 100 million ounces per year. If there were no growth, solar panels would require over the next 30 years, 33 billion ounces of silver. If we look at this forecast, which is from the IRENA, which is Renewable Energies Association, for solar panels, we see that the demand for silver will be dramatically higher, about 5 times higher from today's levels. So that will require as much as 3 times that will be about as much. So 8 billion ounces, let's say, over the next 30 years. That's triple the current solar demand from solar. It's hard to imagine where all of this silver will come from. As far as EV demand is concerned, we're currently, as I say, at 60 million ounces a year. If there were no growth, we'd be looking at 1.8 billion ounces of silver required over the next 30 years. And that's forecast to grow to 5 billion ounces. So that's nearly triple of the current EV demand. If we look at overall silver demand over the next 30 years, we actually need to double the entire supply of silver that we currently have. Not sure where that's going to come from. We're actually in a deficit position. Last year, 2 years ago, 2020, we're likely to be in a deficit for 2021. We expect to be in a deficit again for 2022. So that's just incredible to think that of the last sort of 2 to 3 years, we're in a deficit position for silver supply. And the forecast demand for silver is going to double over the next at least 20 to 30 years. So where, again, as I say, all of this silver supply is going to come from, I don't know. What I do know is that economics work, and that should certainly help to support silver prices dramatically over the next several years. We expect the silver deficit to grow with demand outpacing supply. So things are certainly looking very bullish for silver. I like to call silver sticky money. Now, this talks about, I'm going to talk a little bit about the physical demand, the investment demand for silver. We've seen dramatically strong accumulation of silver over the last 15 years or so, since the first silver ETFs were created. In fact, there were almost no periods where the actual requirements of the actual holdings of silver in silver ETFs have fallen. This chart shows the silver price, which is the black line, and the blue line, or the blue area, shaded area, are silver holdings. So even when we had dramatic declines in the price of silver, we can still see that silver would continuously be accumulated in silver ETFs. And again, we had a sharp sell-off in the silver price in early 2020 when the pandemic hit. There was a slight drop in silver accumulation, and then it actually exploded higher along with the silver price. And so we're at historic highs for silver accumulation in silver ETFs. There's been no significant selling since they were created. In fact, silver ETF demand was up 300% in 2020 over 2019 to 331 million ounces versus 83 million ounces. Silver ETF is expected to see growth of another 150 million ounces this year. And so silver ETF certainly is a very significant area of demand for physical silver. Silver ETFs currently hold about 1.15 billion ounces of silver, which is more than an entire year's supply, which is about 1 billion ounces. As we say, as I've said, investment demand is exploding. Physical silver demand, we still see coins and bars trading at premiums that are up to double to triple normal levels. And if you were to include, with which most research services do not, but if you were to include demand from silver ETFs, then in 2020, we would have been at a net deficit of 25% of the entire silver market, as I say, if you were to include a demand from silver ETFs. So that's quite dramatic. So let's talk a little bit about the silver price and why it's so undervalued, or how it is so undervalued. Here's a chart of silver prices going comparing 1980 to more recently this year, November of 2021. So this is a chart of major base metals, some platinum group metals, and precious metals. In every single case, every one of these metals is higher, in some cases dramatically higher. The least of them is up by 25% since 1980. From there, you go to double prices, so at least double since 1980. Many of them are up 300 to 400 times what they were back then. And silver exclusively is still down about 50% from its 1980 high. So just on that basis, silver looks very cheap. It's still below, as I say, that high by about 50%. If you look at an inflation-adjusted price for silver, it's down about 85% from its 1980 high. To give you some perspective, $1 invested in silver in 1970 is worth about $16 last year. $1 invested in 1970 in gold is worth about $50 last year. So on that basis, silver has a lot of catching up to do versus gold. And here I look at the Dow to silver ratio, comparing the silver price with the level of the Dow. In the 1970s, there were two long waves down in the ratio where silver increased in price quite dramatically in the early 70s to the mid 70s, and then again, a second wave from the mid 70s to 1980. We try to compare currently, I believe that we're in the second half of a very long secular bull market for silver, which started in 2000. I believe the first wave ran from 2000 to about 2011, and that we're likely to start entering very soon this second wave where silver will start to climb dramatically against the Dow. The Dow is about 37,000 right now. If the Dow corrects, let's say 20% down to about 30,000, and we get down to, I believe, a conservative ratio of the Dow to silver ratio of about 100, that would project a silver price up to $300, which is my longer term target. What's silver done in previous bull markets? I mentioned earlier, silver was actually up 37 times in the 1970s. If you look at the first half of our current bull market from 2001 to 2011, silver was up nearly 11 times. I believe silver should do at least as well as it did in the 1970s. So again, we have a lot higher to go. I think that we're starting to enter an acceleration phase for the silver price, which we tend to see in the latter half of bull markets. Silver always outperforms gold in bull markets. It did so in 1980 on a percentage basis, a dramatic outperformance. It did that again in 2011, a considerable outperformance on a percentage basis. And as I say right now, silver is considerably cheaper than gold in terms of its gains over the past, say, year or so. So again, lots of room to make up. In certain periods, silver stocks can outperform the price of silver dramatically. We saw this in 2016, the first half. This compares the SLV price to the SILJ, an ETF of junior silver stocks. And for about the first 6 to 7 months or so of 2016, this silver junior ETF was up by 8 times over the silver price. So we can get tremendous leverage over even sometimes very short periods of time. So how do you invest and profit from silver and silver stocks? There are a lot of options. You have physical silver coins and bars right now. However, the premiums are very high. One strategy that I recommend to subscribers is to, and it's not a perfect solution, but it may be an interesting temporary solution, to actually allocate to a physically backed silver ETF until premiums come down, if hopefully they eventually do. My outstanding favorite in that category is the Sprott PSLV, based on how it's constructed and has very low premiums to the silver price. From there, you have the opportunity to invest in automatically diversified silver miners through ETFs. You have royalty and streaming companies, large producers, growing producers, developers, and then the junior explorers. Just as a quick passing note, a recent study by Bloomberg and JP Morgan suggested that passive index investing during periods of high inflation actually turns out to be a bad strategy that just simply does not perform well. And so it tends to be a much more of a stock picker's environment. So how do I vet my silver investments? My criteria are firstly management. I look at depth of experience and prior successes. I like to see, especially in the explorers category, that they have access to knowledge and certainly capital resources. Rate is always better. Higher is better. If a company is an explorer, I like to see at close to or at least 50% of their main project being silver heavy, or silver, mainly silver. If it's a producer, I look for revenues to be close to or above above 50% silver revenues from production. Location, safer is better. I favor North America, Canada, the US, and Mexico, some parts of Australia and Europe. South America, some areas I can consider okay, quite limited in that respect. I tend to avoid many of the others. We're in a silver bull market, a long-term bull market. And so the best strategy is to be early and to be right. Being right, in my view, in this case, is being in silver. There are some crucial factors to consider, as I say, and identify bull markets early, be there as early as possible. Silver is still 50% below its all-time nominal high, has much, much higher to go. So that's the right sector to be in on that basis. If you can hold on through corrections, that'll help you to maximize your profits and not get shaken out. It's volatile. It's a volatile market. If you expect it, you'll have an easier time dealing with those corrections. And, a rising tide will lift all boats. And so if you're in the right sector, you don't have to be in all the very best performing stocks. They should, across the board, tend to do relatively well. It certainly helps, of course, to pick the better performers, but it's certainly important to be in this sector. A little bit about my newsletter. It's silver focused. As I say, it's all about what I buy and sell with my own money. It's unbiased research. We take no compensation from the companies that we write about. Covers the full risk spectrum, everything from silver ETFs and large producers to junior silver explorers. It's aimed at new and experienced investors with everything from low to higher risk stocks. Published by Resource Maven. We're independent and supported exclusively by our subscribers. And as a precious metals expert, I regularly contribute to some of these different media outlets that are shown here. And as a final note, I'm working on a book about investing in silver called The Great Silver Bull. Look for that. It should be coming soon, hopefully within the next sort of month to 2 months as I finish up. And if you'd like to know more about Silver Stock Investor, please go to silverstockinvestor.com.